Today is Wednesday, October the 2nd, and this was an amazing follow-through day after yesterday. Right from the opening, we just continued to move down, but look at the volume. The Dow, we haven't seen that kind of volume since we saw this kind of blood in the streets last week. Was it Friday? I can't recall, but there was a tremendous volume. Same with the NASDAQ and same with the S&P 500. Big volume everywhere, and decliners to advancers by 3-to-1. So we've been saying that the only place for this to go was to the oversold line, and you can be sure that that's where it's going to be tomorrow. It's going to be like this or even further, maybe one of these two, which should signal a bounce back. Now, Sentiment Trader, if you follow him and get his daily newsletter, said that small investors like us have been buying a record number of puts. And every time that we do that, it signals optimism for the stock market, simply because small traders like us are not very good at what we do. So when we buy puts, that's when the big guys decide that they are going to buy stock and make our puts just be worthless. So that's what happens. That's the other side of the trade, right? So the guy that's selling you the put, the market maker that's selling you the put, if he sees enough of those, he knows that the sentiment is fearful. And that's when these guys get excited and then they start to buy. So let's see if that is supported by the charts. The S&P, we created a gap. We said yesterday in our little video that we were likely to open up another gap after having filled this one perfectly. If you see here, this was the top of the gap, the bottom of the gap, and we came down to touch it and finished just above it. That sort of indicated, and with a tremendously steeply declining 8 EMA, that we would probably open with a gap down, and that's what happened. We came and we touched the 200 and we saw buyers there. We went below the 50% retrace of this wave to touch the 200. I tweeted at some point this morning saying we're going to go to the 200 for sure, and we need to find support. Well, we did. The last time that we went to the 200, look at all these days back here in August. We found support. We found support here back in May, but we lost it temporarily for a couple of days. Back here, the 200 acted as resistance, very little resistance, but then it acted as support for a couple of days and then gave us a bounce. Here, the 200 was acting as resistance. So the 200 is important, and it's a pretty good sign that we're able to rally this much from 28.74 all the way up to 28.87. So let's go back to FinViz and just see what happened. So we saw this little small move up, this little rally starting in the afternoon after we had hit the 200. 89% or 90% of these stocks that FinViz hit a new low. 303 stocks hit a new low. 34 stocks hit a new high. So 90% of those stocks making extremes were new lows. Let's go look at some other stocks. Apple, wow. Apple had a big pullback, and that's got to be a nice opportunity for people to be looking at buying Apple. because there's really no bad news, no reason for people to be selling Apple other than they've made a great profit through September on Apple, and was this channeling, and it looked like it was going to break out of the channel, but this type of a candle, like this one here, which is an inverse hammer, almost signals that the enthusiasm wore off and stocks ended near their lowest of the day. So that's a negative candle. We saw a little bit of comeback off of the low for Apple. So I'm going to say my good folks at Motive Wave came up with a fix for why I lost my arrows, and my arrows came back. So when I loaded the fix, all my arrows came back. So I'm going to say that the short-term look for Apple here is going to be up. And I'm going to attach it to the bottom of here so that I'm on record now for saying that Apple is up. I sold 2 December 210 puts, December 20th, 210 puts for $7.95. So let's say that's roughly $800. So that's going to give me $1,600 if Apple finishes over 210 by December. And I got a feeling that it will. I will add more of those short puts. And I don't mind owning Apple going into next year at $210. So if it ends below 210, I'm going to own the stock, but because I made almost $8 in premium, my net cost will be $202. So that means owning Apple right down here where it was at the end of August or the beginning of August or July. I just think it's below the 50, it's below the cloud, it's below the 68.1, it's just above the 200 is where my cost would be, and I'm pretty comfortable in owning it that way. If Apple drops a bit more, then those short puts will be losing for me, but they will become more attractive to actually enter a couple more. Caterpillar is just getting the juice hammered out of it. So I thought we would move down and then up. I'm really going to have to take that up forecast and move that, but I don't think we're ready to see Caterpillar move up yet. I'm thinking we could see this kind of action, and that's the way I would be playing Caterpillar. I've only got 400 shares left. I'm dying to buy the stock back again. I think it's a great company to own, but we had these 2 rejections of the Chiku span off the 50, and now the Chiku span could take us down to 117.83. That's entirely possible. I'm going to revise that and say we're going down a little bit further. GDX is up. I really thought that it would be up higher, that people would be taking advantage of the strong dollar and then moving into gold, and that hasn't happened yet. But look at this, the Chiku span did bounce off of both 50s here. The 50 SMA, then the 50 EMA, and now it's popped up. So that was a nice area of support here. I'm going to say that GDX, for the long run, is going up. I like it, and I have a ton of stock. T, down 34. I'm going to roll my 37.5 calls out a week or two, but I'm going to wait till tomorrow to do it because TD Ameritrade is not going to charge commissions anymore on trades, only on selling option contracts. So I mean, I'm only paying $5 for a trade, but what the heck? I wasn't going to make that trade today. I'll make it tomorrow. T moved up a little bit. So we said back here in September, middle of September, that T was going to go down It looks like that is what's happening. I still think it might be going down a little bit further. WDC had a 3% loss and fell below the 50. This is a good stock to own. They've just declared a 50-cent dividend. I'm not ready to buy it yet. I'm going to look for cloud support. So I think that it's coming down to test the cloud. Whirlpool. Nice little pullback. Let's see more of that. Let's see it come down to this trend line. I can't say that it's going to happen, but I would like to see Whirlpool move down, and think that that might just be what happens, and it might just move along slowly and try to find some Ichimoku support on the cloud. The Chiku span not telling us too much. Let's just look at the weekly and see if there's any information to glean on the weekly. Where are we? Here we go. Weekly. Well, we had the Chiku span bounce off of this trend line. How interesting is that? And on the week, we are down, but we had a heck of a good run for 1, 2, 3, 4, 5 weeks where Whirlpool was just running, and now it's taking a breather, and it would be nice to see it actually come back. I'm going to get rid of that one and start looking at this wave here in terms of Fibonacci's, and we have come back to the 50% perfectly and had rejection. So I think this is an important set of Fibonacci's to be looking at when you get rejection at exactly the 50%. But it was also close to 160, which is a nice round number where people might want to sell as well. So not looking at Snap anymore. It's dead to me. That's sort of the rundown for now. Let's expect a bit of a bounce tomorrow.